Hi guys, I'm Stephen Edwards. I'm the director of Grow Profit First Accountant. So I'm a chartered certified accountant and I run Grow. Previously, we were known as CTA. We're based in Gloucestershire and we help lots of business owners, entrepreneurs, and self employed people throughout the county and also throughout the country. So, in this video, I want to talk about what you can actually claim as a self employed person. So there's kind of a lot of information out there. Information is kind of everywhere nowadays. We've probably got too much information, and that doesn't really make things easier. If anything, for a lot of people, it probably confuses us, which is why videos like this exist, which is why accountants are still in a job. All the information in the world to do anything you want, to build your own house, to fix your own car, to do your own accounts is out there, but it's very confusing. So my style and our style at Grow Profit First Accountants is actually we want to make it really easy, jargon free. I'm a qualified accountant, but I don't really speak like an accountant, and I think that's my kind of superpower. So I'll dive straight in. So if you're self-employed, whether you're new to being self-employed or whether you've been going for a few years, one of the dangers I want to talk about is you don't know what you don't know. So you might be claiming something. I hear lots of people saying, "Do my own tax return as a self-employed person is easy. Do my own accounts." And potentially, yes, that could be true. But the thing is, you don't know. If you fix your own car, you know if it worked or not because it will drive or it won't drive. But when you do your own accounts or your own tax return, you don't actually know if you've done it right because you might be assuming HMRC would tell you, but they most of the time they don't. Unless it's really obviously wrong, which they can't tell a lot of the time. You don't know if you submit it correctly. So there's two mistakes I see when people do their own tax return or submit their own account as a self-employed person. I'm not talking about limited companies here. So the first mistake is you claim too much. You claim things you should not be claiming. You claim, you're claiming all these cars, all these vehicles. You don't really know if you should be claiming mileage for how many miles you do in your vehicle. You don't know if you should be claiming buying the car. You don't know if you should be claiming depreciation, capital allowances. You just don't really know. So you just end up claiming too much. And I've just gave you an example of a vehicle. It could be your mobile telephone. You don't know what to claim, how many phones to claim for. You don't really know what to claim for working from home, so you just claim everything. You don't know what to claim in terms of your meals, in terms of travel expenses, so you claim everything. So that's one thing I see. The other thing I see is people not claiming enough because they're scared of claiming too much. So they're the two ends of the spectrum. So I'm going to give you some really nice basic information, keep it fairly short and sweet, just give you the fundamentals. So, rule number one, the thing you need to realize, it all comes down to this, is the expenses need to be wholly and exclusively for business purposes. So, if you've got something and it's not related to business, so for example, my gym membership, there's nothing in that I can say is wholly and exclusively for my business. So it needs to be related specifically to your business. So there's some really easy things. So if you're I don't know, if you're a builder, for example, and you buy materials to be able to do the job for your customer, that's quite simple. You have to buy those materials to do the job. If you're buying stock to resell on Amazon, again, it's quite simple. You're buying the stock, you're selling the stock. It's clearly for business. Where it gets a little bit confusing is, particularly with self-employed, is if there's some personal use to something. So I'll take your mobile phone as an example. You could have a mobile phone bill of £50 per month, but actually you might use it 50% for business, 50% for your personal use. In that example, we would do a private add back to disclaim 50% or we'll only claim 50% in the first place. So the easiest thing to do is just to claim 50%. If you use your mobile phone, 50% for business, 50% for personal use. And I say mobile phone because in theory, it could be quite easy to track. We can track the calls. We don't necessarily want to get that scientific as business owners, but there's a way of tracking it. The problem with certain expenses is if you cannot split the business and the personal use, you cannot claim it. You need to be able to say, this part of what I'm claiming relates to my business. And just give you some background when we're talking about mobile phones, typically you're probably going to be claiming at least 75, 80, 90%. But it depends on your business and your circumstances. So what can you claim? So anything specifically for your business. So that opens up a big, wide array of expenses. So if it's exclusively for your business, typical things we see, stock, I just gave some examples of stock, or buying goods to resell, or materials to do a job. If you're a service-based business, you might be paying other people. You might be paying a subcontractor. You might, if you're a builder, I've used that example, you might pay an electrician to help you with the job for the customer. That's an expense for you to claim. Mobile telephone, travel expenses. So when it comes to travel expenses, it depends if it relates to business. So if you're traveling for the purpose to do a business activity, so let's say you're going to a business training event or you're going to a conference, you stay in a hotel, you have a meal out when you're away, all of that is fine because you are traveling for business purposes. It gets a bit more complicated if you're traveling for personal uses and you happen to go on a business trip. That's a video for another day. But if it's specifically to go to a business conference, training, exhibition, whatever it is, that's all fine. But also when you're out and about, if you're visiting a customer's office, you're traveling to see a supplier and you pop out to get yourself a coffee when you're out and about, that's fine. You can claim that as well. Motor expenses can be a little bit kind of, a wide area really, because it depends on your circumstances. If you're a tradesman, you can always pretty much always claim your commercial vehicle. So if you've got a van, a pickup, something like that, then typically we can claim that, but we're not going to claim it as an expense in your accounts. We're going to claim capital allowances, which I will explain in more detail. But the principle is you can claim a commercial vehicle if you're a tradesman. If you're not a tradesman and you're trying to put your car through the business, we would put it in as an asset and we would claim capital allowances. So we'd end up claiming a certain percentage each year of that vehicle. But the point is you can claim something, and I'll do a separate vehicle on capital allowances. Just give me a shout out if you want to know more information about capital allowances and depreciation. But you can claim something. You cannot claim all of it in the first year. If you bought a car for £5,000, you cannot claim the £5,000 in year one if it's a car. If it's a van and it's a commercial vehicle, that's completely different, and typically we can claim all of it in year one. You can also claim the actual motor fuel. So the motor fuel, the insurance, the MOT, the tax. If you've got a business vehicle, you can claim that. You need to also consider the personal usage, as I mentioned. So if 10% of it is personal, 90% of it is for business, you need to claim 90% of it, not 100% of it. You can also claim working from home. So if you're a freelancer or whatever you do, you've got home office or home space. I'm in my living room in my house at the moment. I go about different rooms in my house. I can claim a proportion of my household running expenses. We've got a template to tell you what you can claim. There's different rules and regulations, or there's different methods and calculations to figure that out. The kind of standard minimum is on HMRC's website. If you Google HMRC self-employed working from home calculator, there's some flat rate amounts. They're pretty low though, so I do think this is worthy me doing a different video. It starts from around £10 per month. But generally speaking, if you're spending any time at home, you can probably justify a bit more. And in some instances, quite a lot, we can actually justify claiming through the business. If you've got a partner who's helping you in your business, you need to consider, should they be on the payroll? Should you be paying them as a self-employed person? Should you be a partnership? So there are opportunities to save tax by actually paying someone in your family. Again, I think that is a separate video. Business insurance, accountancy fees, marketing and advertising costs. These are all typical expenses you might pay out. Computer equipment, if you're buying a laptop, a MacBook, and also including buying your phone. Most people pay in a monthly amount, as I mentioned, so you'd claim a percentage of that monthly amount. However, if you're buying the phone outright, the same principle applies. You can claim a percentage of the phone outright. So there are some more details, but I try to keep it jargon free. I avoid the Cantonese. Hopefully that's useful. Give me a shout if there's any specific areas you want me to dive into. Thanks guys, cheers. And if you want to have a chat with me, discuss anything, feel free to get in touch. We're Grow Profit First Accountants.